has come up with its earnings, wherein for the Q3, Accenture sees FY23 revenue growth at 8.9% versus 8 to 10% earlier. What we have seen is that the revenue growth has been in single digits, wherein 3% has been the revenue growth in US dollars, 5% revenue growth for Q3 in the local currency terms, with the number at $16.6 billion. But on the revenue growth guidance for FY23, that has been lowered to 8 to 9% versus 8 to 10% earlier. But let's get in more details on the Accenture earnings this time, and what kind of a cues should Indian IT companies be taking at. And to get all those details, we are being joined by Anisha Jain. Anisha, hi, very good afternoon. What's your first take on Accenture earnings and how the internals looking like?
Hi. So yes, it's a bit of a muted set coming in from Accenture, but definitely not ugly, because if you look at the Q3 performance, the revenue is largely in line with expectation at $16.6 billion. Yes, the margins look optically lower at 14.2%, but if you adjust for the one-off, the margins also stand at 16.3%, which is 20 basis points higher than the last year. There's a couple of comments which are also positive. The very strong double-digit growth continues when it comes to the cloud vertical. However, having said that, BFSI vertical has managed to grow by just 5%, and North America, that's up only 2%. That for me is a bit of a worrying factor. Separately, I think the reason why the stock in the pre-market is showing a bit of a downtick is the fact that new bookings have come down. So last quarter, we had seen new bookings to the tune of $22 billion. That's sharply fallen to $17 billion. Yes, the company had pointed that in this quarter, the bookings will be lower, but it's substantially lower than what the street was working with. And then, of course, the final, nail to the coffin is the fact that there was a downgrade coming in when it comes to the guidance of full year. As you rightly attributed, it was 8 to 10% earlier for the full year. That now stands at 8 to 9%. This time, the street wasn't expecting any cut with respect to guidance, so that's why a bit of a surprise or a shocker coming in there. But again, I wouldn't call it an ugly set given the headwinds that the entire sector is facing. It's par for the course. Consulting was a bit of a worrying factor, which was down almost 4% on a year-on-year basis, but made up by outsourcing. So overall, a muted set coming in, but not a very large negative at this point of time for the IT sector.
Okay, thank you so much, Anisha, for getting us all those details. So that was Accenture.